The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. 877-927-6648 is the number to call. I'm considering that this is possibly, for me, one of the most important monthly closes that we've had in maybe a year, in a very long time. Many reasons for it. I want to take some time today, as if it's Technical Friday. I'd like to go through a whole bunch of things I need it for myself, need it for my subscribers, and I hope that you can get something out of it. We are looking at the Dow right now on the left. This is the daily chart at a peak C in the Chapman wave, a gray peak C. We make that gray. The implication being it's under the major high that was made at peak D at 26,616 on the 26th of January. Slumps over 3,000 points in a very short period of time to the low of the 9th of February at 23,360. Fortunately, we did go long the very day after. We got long the day of the decline, took a very tiny percentage loss, less than 1%, got back in on Monday, the following session, and we've been long since. We had another long that we bought yesterday in the Dow in the very sharp decline. That actually went to a profit this morning, and then we got stopped out because for some reason I thought I'd raised the stop if it broke to a profit, and I forgot. So we did take a bit of a loss, under a 2% loss. However, the reason for getting it was that the MACD was very good and the stochastic was very good. We had already gotten to a leg C, and if there was going to be further activity to the upside with new recovery highs above the high yesterday of 25,000, that was 25,800. I love these round numbers. It should happen with a Chapman wave trend gauge flashing yesterday to say that within 9 to 11, within 2 days, there should be a 9 to 11 point rally in the E-mini, which should affect positively the Dow and the S&P cash indexes. My thinking was that if we did get that rally, it needed to hold. Well, we were up 160 points, and then we just went down 60, 70 points, and now we're unchanged. So this is the chart on the left. I'm going to discuss that. I'm going to discuss the weekly chart in the middle, and I'm going to discuss the monthly. So let's get rid of all the other stuff. We go. The Dow right now, most important parameter is the 9-period moving average support at 25,246, and a break into the 25,800s, and that really has to happen by Friday at the latest. Okay. Now we go to the S&P. Let me one at a time. So that says that the weekly chart is stalled with a potential doji candle right here. Poor technicals, and it hasn't broken like the QQQs. It hasn't broken yet very sharply to the upside. That's why I'm saying this is perhaps one of the most important charts that we're looking at, because the weekly chart has had the 3,300 point decline, rallied back very sharply, and the weekly technicals always take a long time to repair. But I would want to see by Friday, certainly by next week, Wednesday, some kind of trade up here in the 26,000s, preferably 26,100 at minimum. Otherwise, this monthly candle is making a peak E. Peak E's are where you've got to really say, whoa, watch out, especially with the type of candle that could be produced if there is no new high in March. So I just setting the stage here. And I'm going to cover a whole bunch of things. So here we go. S&P, SPX and X. S&P up 279 at 27.47, made a peak C. I've also drawn in the H pattern. I've also drawn in the upward trend line, which is just being pierced right now. But the MACD and stochastic are good, and the stochastic is actually at 87%, which is one of the reasons why we are still mostly long. We have one short, which is really taking it on the chin from the 33.5 area. It's down below 28, and it's at 28.20s. So S&P parameters needs to go within 3 to 4 sessions above 27.89.15 to start leg D if it can't do it today. And it needs somehow or other to be holding the 28.11s. That's quite a way to go from here. And the weekly chart, same as the Dow, technicals are very poor, and the monthly chart is going to make a peak D today. So we're watching this. Now the QQQs, this is fascinating because the Q is up 32 cents right now at 168.61. 170.95 was the all-time high peak E on the 26th of January. Plunges 18%. That's a huge pullback. It's one of the deepest declines that the Qs have had in a long time. And what happens, it goes to the 150 level on the 9th of February, and it rallies back to within cents of the all-time high. It goes to 170.73, 23 cents from an all-time high. It should do that, and I suspect it will try to do that. Here's that V-shaped pattern. I'm going to talk about these patterns anyway. We'll get back to it. Monthly chart has repaired itself beautifully. This is very good action. If there's a new high, it extends leg D. If by 22 cents it misses, it's a Chapman wave 2-bar reversal. Watch out below. I'm getting to conclusions very soon. IWM failed miserably. It's at a peak D. It's making a leg D. It's probably making a peak D here. Doesn't look good. Daily doesn't look good. Weekly doesn't look good. Monthly is in an uptrend above the 9-period moving average. All I can say is it's okay. That's all. So now I want to let's go to gold. We'll just finish these off. Gold is up $3 at 13.21, trying to find some kind of support here. It really is in a trading band. Nothing much to see here unless it either breaks down below 13.10 or it breaks up above. Oh, it has to get to 13.21. I would say it has to get to 13.33 to even be impressed. So let's see what happens there. Silver will do that. Silver's the same thing. It's a little bit better chart than gold, funnily enough, but at 16.49, it needs to really get to the 16.70s, 16.70, and it must hold 16.20 support. High-grade copper is down very sharply, down at 3.13. I told you yesterday we were going to go buy a long position in copper. Copper stock decided no, doesn't look very good at all. I'm going to go to crude oil. Crude oil right now is trading at down 91 cents at 62.16. It's stuck in that range. It went a little higher than I thought. I said 63.30 would probably be the high. We went all the way to the 64.30 level, 64.24 level, and now it's just consolidating. I think it's got good support between 61 and 60. The TLT will spend some time to get back. Basil Chapman, type it.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's go to the TLT, which is the Lehman 30-year T-bond fund. This is actually the yield that it produces, and it's the 30-year is the white one right there, weekly chart, TYX, and a peak C. If by Friday there's no new high above 32.21, peak D in the 10-year TNX and the cyan-colored FVX, the 5-year, is a leg D, extended this week by, yep, this is a leg D. I've got a bit of a mixed market, a mixed series here. I've got a peak C, which says it should still go to a D. We should have some kind of a pullback in yields just for the moment, maybe into next week and the following week we make a high. You've got the 10-year, which is in leg D, which is probably going to make a peak D without making a new high above. This is what I'm thinking. There's still a couple of days to go. 29.43 is the high, and it's at 28.79 right now. And the cyan one is still in leg D. So that says there's a really good chance that the 10 and the 5-year go to ease when the 30-year finally makes a leg D. And that says yields are going higher, but in the shorter term, I'm talking weeks rather than months, there should be a little bit of a days to weeks rather than months. I'm expecting some kind of a pullback. This is a very important chart behind here. This is the chart of wood, which is the Global Timber and Forestry ETF, pulling back sharply in the V-shaped formation with the right shoulder failure at this particular point, but it's a weekly chart. We've got to wait until Friday. It just missed by cents getting to the 77.99 high of the week of the 2nd of February. And this is something I'm going to be watching real close, especially with copper pulling back, because these are international markets. Global Timber and Forestry ETF and the high-grade copper. High-grade copper is already signaling weakness. This has been signaling strength, but a retest is going to be very important here. The housing sector, even with yields pulling back a little bit here, no such thing. They're not rallying. There's that lowercase h pattern that I always talk about. If it takes out the low of 313.56, it's at 322s right now. If it does that over the next 2 weeks or 3 weeks, wow, watch out. That's all I can say. Then this huge trend line support is going to be next, and that'll be around about the 307 area. So I'm out of this chart, these two charts here. I want to start talking nitty-gritties. or maybe gritty nitties. What I'm really looking at here is, look, what I said to subscribers to my opening call. Here's the 120. I show these charts every single day. This is the 120-minute chart, which leads to the daily chart. The 120-minute chart made a peak D right there at 25,800. It was also Chapman Wave 5. I changed that this morning when I sent out the newsletter to say, no, it's not a 3. It's not a 3. This is really a 5. And we've had a very sharp pullback. That was yesterday. And there's all the evidence to say that although the MACD and stochastic are holding okay, you've got to watch out. So as a result, I say the 20-period exponential moving average, the green line there, is going to be key support. Watch out if we touch that. So that's the 120-minute chart, and it's on the shorter term. Looking at the, there we go, and that was, there we go, click, and we're going to go to the daily. Oops, not the daily. Let's get out of that. Yeah, so I wanted to show the daily because it's very important. If the daily fails, oh, that's the one. Yep. So if the daily has gone, I've got this as a 3. I might have to make a change here because there was technically a 3 and a 4 in the Chapman wave. Go back to the D. Sorry. That's not the one I want. Why am I? Oh, sorry. I'm going to do this again. There it is. Okay. So here's the daily chart. What I said is, if there's a plus 30s or more at 10:10, and then rallying to plus 40s or more at 11 a.m., it will allow for some healing today. What I said in the 120-minute chart, because the 120-minute chart is obviously the near term, what there I said is, yeah, coming back from is this right? Why am I mixing this up? I'm sorry to be a little kind of, I did this, I need to get this right, because the way to explain it, I have to go through the different time frames. I want to lead to the monthly chart. So there we go. So that's the daily. And yeah, here we go. So here's that 120-minute chart. And what I said there is, if there is at least a plus 40s or more at 11:10 a.m., the chances improve for an up close. However, it needs to be a good up close over 60s to save the day. So what happened was, at exactly that time, let me move this away now, at exactly that time, right here, and let me go to a 2-minute chart of the Dow. Right there, 11 minutes to 10, the Dow is up. It's at 25,445, and that's up 35 points. And that same bar takes it down to 25, there's a 2-minute chart, to 25,388. That's the reason why every day I give these parameters to my subscribers. And I've chosen over the last, it's the first time I've actually done this for the last, I'm not sure, maybe it's the last 2 months, maybe it's 3 months. I talk specifically about, no, it's actually more than that. 11:10, 10 minutes past 11 Eastern time. For some reason, every year I choose certain times. It just seems to me it sticks in my head as very important times. I haven't got any thing other than background in my head why that time is important. But that was exactly it. And it happened yesterday and it happened again today. So 11:10 was very important because it said, couldn't hold the rally. And that says a couple of things. It says there is absolutely some kind of divestiture, some kind of rotation through different sectors going on right now. And you can see it because of the time that you got the market up sharply and then down sharply. Then it goes down sharply and it comes back up. but we've seen more slides than rallies lately. And that says to me there's some kind of a distribution going on, okay? Now, let me put the whole package together. In my monthly charts, I'm going to treat this as I'm not going to. There are a lot of questions coming in. I'll try to get to those questions. I need to clarify this for myself. This is an educational program, so I hope it clarifies it by my being able to articulate a lot of questions that have come in about what's going on, what are the longer-term implications. So let me go back to the Dow and explain to you. We've got a break coming up. I want you just to look at this monthly chart, and you will see that 12% correction was the deepest correction we've had since 2016. Doesn't mean anything. It's just an eye blink. It's just something that doesn't matter. I'll talk about that when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, so a couple of things that we need to be looking at here. So I want to talk about the dollar. I think that I had a call from Ben. I'm sorry, Ben. I did not see it until, whoops. Usually I'm looking, but this time I was busy looking at my charts here. So I think the question was the dollar. Dollar was coming up straight after the TLT. This is the first time that the TLT's managed to hold above the 9-period exponential moving average for 3 sessions. Well, let's include today if it works, in absolute ages. That's the Lehman T-bond fund, Treasury bond fund. And it's saying to me that the weekly chart is very weak, W-E-A-K, as is the monthly with the arch formation, but it hasn't taken out the 116.79 low just yet. Got real close. Went to, and it has taken out the 116.51 low from 5 days ago. That was the low on the 21st of February. So this arch formation in the monthly chart is absolutely imperative to monitor. It is one of the things that we look at for a major long-term holding pattern. It has not broken that since 2011. There's a channel that actually goes much longer than that, but it's much lower down. This is the one I chose. It's a rising channel line, and it's taken it out, but it hasn't closed below it. We've got to wait the whole month of February. That's this month. We'll see where it closes by the end of the day. But most importantly, is hinting that rates are going to go higher, that the Japanization of our bond funds is kind of over for now, at least. And so I apologize, Ben. I know you had to wait long. I didn't see you waiting there. It was my fault. So this is what I want to do. If the TLT goes from 118.53 where it is now, over 121.5 to 123.5 in the next few weeks, that's very positive, and that suggests that it's going to take longer for the 30-year to eventually make that leg D, in the weekly chart, that is. But the others have already succeeded in going to D, so that says, you know what, we could in fact have a little longer time because the 10 and the 5 are way more important than the 30. Okay, so that's that. Now what I wanted to say is the dollar rallying, and that's, I think, what Benny was going to talk about, and I'm not sure exactly what his points were going to be, but I'm going to just suggest to you that the reason why I'm looking at weekly charts, going to monthly charts, weekly closing on Friday, but the monthly closing today, is that the implication is that a lot of things have happened here that have been percolating in the background, and they could very well have an effect on the market. Here we go. If the dollar all of a sudden changes its stripes and instead of being a bear becomes some kind of a jaguar or a cheetah and manages to sprint from the 90.52 area into the 92s, and it does it fairly soon, I think you're looking at a change in the market in terms of one of the elements that impacts certain sectors and certain cyclicals, certain internationals, and that could in fact have some deleterious effect on the euro. Here we go, where did I type it? On the euro, EUR-USD, currency pair, and that euro, which right now is trading at 1.22, it's down a little bit, not bad, but it's down below the 50-period moving average and way below, and a little bit below the 9-period moving average in the weekly chart. This is going to be very impactful because if the euro goes into the 1.20 or 1.19s as the dollar is rallying, you've got a disruption here together with rates, together with the home builders, together with certain sectors that are both interest rate sensitive and overall, remember I spoke about the copper, I spoke about the wood, WOD, together with macro influences. And that's saying to me, we are looking at sector rotation, and that sector rotation could impact the market to make it a bifurcated, diversified market that has one set of parameters for some sectors and a completely different set of parameters for others. So that when you're looking at an index of, say, the S&P, the S&P might be able to hold up within a range under 2,800 or around about 2,820, let's say, and a bottom in the 2680s, and it could stay there for quite a while. We could have a side here, I'm coming to my point, a sideways consolidation based on a monthly peak D in the S&P, based on, if you remember, we went to the NDX 100, and we said the NDX 100 is in fact in a leg D. It wasn't in a C like the QQQs. And because of that, oops, let me just get rid of that. And because of it, we've got to watch for this pattern that I always talk about is the V-shaped pattern, the Marx Brothers eyebrows. This is Karl Marx, whatever Marx it was, Groucho Marx. Eyebrows, where it starts to fail on the right side, and then unless the Qs can go to the 170 high 172s, 173s, sometime fairly early in March, there's a real good chance that we're looking at some kind of a V-shaped pattern, and there's going to be a consolidation that could take you back maybe even to the 164s, the 9-period weekly moving average. It doesn't have to break down. And now I can get to my big point, which is, you remember I spoke about the internal low and the residual low? The only way you get rid of making some kind of a residual low is to either use a lot of time or to have a V-shaped formation in the charts that take out the previous high in a very quick time frame, but they have to, whatever indexes you're looking at, they have to close above that left side high for a little period of time. And I'm saying 2 out of 3 sessions at least, you need to close well above 171, 171.95 is all-time high. You have to close above that. I have a leg C, probably a peak C, and it looks to me like you could go to a D still. I have a number of charts that are in B and C in the tech sector, in the sectors that are moving, and that suggests there is residual strength. And this is a bifurcated market, and now I'm not sure you can talk about the market. Remember, the Dow is price weighted. You're looking at something that is sector and stock specific. For instance, for my subscribers this morning, as a stock, I decided not to get some of the stocks that we've been talking about for a while, as stocks that are cyclical but are having very good action and it should rally well. I wanted to choose a stock that held the best yesterday, was making all-time highs, showed that it had, for whatever reason, real upside potential. So we grabbed it this morning at the open, and it's up very nicely. It's ignoring what's going on in the market. I want stocks that are market independent right now, and that's going to be very important in my Traders Corner, in my subscription, the opening call. I'll be right back and answer the question. Basil, do you see anything in your book showing the market top in March and holding under until August? I'll be back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me sum this up quickly. The V-shaped formation in the Qs is actually pretty good, and it's telling me that the tech sector is still leading, but we haven't broken out enough for me to decide that they're going to carry the markets much, much higher. The question as to do I see a major market top now in this period, or let's call it the March period, that will not see another high until August? No, I don't see that right now. But this is what I'm really concerned about, that if we are looking at, how can I put this in one frame? Let's go to, well, anyone can pick up the SPY. So we'll go to the SPY, right? The S&P 500 depository receipts is the trading vehicle, the S&P Spider Fund, SPY, trading at 274.81. This pattern here is starting to lose too much steam on the right. It's still good. It's above the 9-period moving average, and it can repair. But it has to do that speed is your friend in a bull phase. Speed is your friend in a bear phase. Look at the way you came down 12 or 13% from 286 to 252. I'm looking at this and I'm saying, you know what? Within the context of this pattern, once again, we've got fighting patterns. Now I'm going to put it into just numbers. If you see the SPY in the next week going from this Friday to the following Friday, first Friday of March, and the SPY is under 269, that's the pattern that I'm looking at that says internal low, expect a residual low to occur. Could happen at 250, 292, the low of the 9th. It could happen below it, on it, or just above it. But it's earthquake and the aftershock. Aftershocks can be bigger or smaller, but that's what we'll be looking at, an aftershock. If, in fact, we just go sideways a little bit here, no breakdown, and then all of a sudden the SPY starts to trade at 281.50 to 282.30, that's very positive. It says there's enough residual strength to try to make that V-shaped pattern here as well. How it affects the monthly chart is going to be very important, but you've got this middle chart right here, the weekly chart. So I'm going to jump to the weekly chart and make it real simple. Any close below 269 in the SPY is very negative over the next week or two. Any close above 282 in the weekly SPY says good, you've got enough resources to keep going. The answer to the question of do we make a top here and then we don't get anything until August? No, that's way too long. And I'm anticipating the final top. Eventually, when it comes, we will see 1,000-point gains in a day, 2 successive 1,000-point rallies, not declines, rallies, before we make our final top. And that's going to take a long time to build that kind of impetus to the upside. And you will see stocks like a Schwab, like a Ameritrade, TD Ameritrade. You'll see them screaming to the upside. So that's the outlook. Now I'll answer questions. Boeing. Question about Boeing. Trading right now at 368.48, up 3.84 in leg D. MACD is good, not nearly as good as it was way back in January when it was at 352 and the peak D high, but it is holding very well. Stochastics at 93%. I see residual strength in Boeing. Leg D daily, leg D weekly. leg E monthly, I'm giving you numbers. Until Boeing closes below the 9-period moving average of 358.55, I'm even going to say right there on the, I always forget what this one is. I think it's the 14, yeah. Until it closes below the 14-period EMA of 354, it's in a buy mode. As soon as it closes below that, the daily will go to a sell signal. Not even a sell mode yet, but a sell signal. I like it at this particular point, but leg D says, watch out. If we start to fail, you watched Boeing, because the high of 361.35 in the first, that was peak E, and now it's at a whole brand new A, B, C, and a leg D going on right now. It's showing strength. But when Boeing starts to fall, the cyclicals, I think, will tank as well. IYT, the Transportation Index. IYT fading right now, 190. This is another sign to me. Look at this. The weekly chart says, no, that's horrible action. Lousy bounce. It's a bounce. And the monthly chart says peak E in Chapman Wave 5. Watch out. Transportation IYT trading at 190.16. If you see their close under 185 any day, just give me a yell, because that's a tip-off to say starting to fail. At this point, it's just holding nicely. It's not breaking down. It's not doing anything much, but watch it closely. Next, so the question was, Bob says, transportation in weekly sell mode, setting up 1987 crash pattern. I don't see any reason just yet to say that there should be a crash unless crude oil screams to the upside, and I don't see that doing. If crude oil goes to 68 to 72 in a very quick space of time, I think everything will start to pull back very sharply. I think crude oil is just kind of stuck. So remember, this is the last day of the month, so it's going to be important how the monthly charts close. Anything can happen between now and then. We've had a big move up. We've had a big move down. We can have another big move up and then another big move down. Anything can happen. So I don't want to talk about the monthly charts until tonight when I've seen the closes. So I'm talking about at this point, the weekly chart is very poor of the IYT. And that's suggesting to me that the close today will say, hey, watch out, you don't get one of those Chapman Wave Roman candles in the IYT. If there's a close, I don't see how it's going to happen. But if there's a close in the 188 area today in the IYT, then monthly candle is going to say, uh-oh, watch out. But I don't think that's going to happen. Next thing I had is a question with copper. I did copper. I said copper's looking very poor. Copper's coming down. It's at 3.13. Watch out if it doesn't go below, if it goes below 312, 310, that area, that's very poor. Let's see, JP Morgan. Okay, so JP Morgan at 117.56 peak D, holding quite nicely. So there was a discussion in the den about the XLF going sideways. So this going sideways is, so far, it's really not a bad pattern because it's filled the gap nicely. I love when gaps are filled and it goes even higher than the gap. This is the gap of the 5th of February. I had said yesterday that it's KRE that seems to be doing a little bit better, and it seems to me that's saying that maybe the towns and cities, the locals are starting to give out more money. That's the S&P regional banks. So I'm keeping my eye on this. We still have our bank stock. We have Bank of America. It's acting very well. It's done nicely. And I said today I would look a little deeper at Goldman Sachs. Goldman Sachs right now, yeah, peak C, it should make a D, but it's starting to stall in this area. Goldman is acting very well in that V-shaped pattern. The monthly chart is really strong, leg B, probably a peak B by the end of the day. So let's put this together with the finance. Yeah, let's look at the financials. That's just Goldman Sachs acting very well, holding well. Is it a buy right now at 267? I would say you could tiptoe in because of the rates, interest rates. I would prefer to see how it holds 260 to 258 if it pulls back one more time over the next week. But starting a small position here, I think that's fine if you're in for the longer term. I want to look at Visa. Look at Visa, got that V-shaped pattern. I'll talk about that when we get back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Folks, don't forget, Steve's coming up. Great show as always. Same thing with Dave White. Then, of course, you've got Tom O'Brien. So stay tuned, and don't forget, this is the last day to sign up to be a member of the Den. A lot of people in there. It's getting very exciting. So let's look at MasterCard. MasterCard is now in a leg B to the upside after making a peak F. So I'm looking at the financials, and I think that the higher rates have, of course, had a really positive effect on the financials, not just the banks, but also in the credit card type issues like Visa, MasterCard, American Express. So this is different. This is the pattern that I like. You see how you've gone above the V-shaped pattern in the weekly chart from the peak E at 177.11 on the second for MasterCard MA. Now you're trading up in the 178, 179 area. This is much better. This is that lopsided V, which breaks above resistance, and it needs to close above there. So if Visa and MasterCard, if they're able to get past the left side high in the V-shaped pattern and then close a couple of weeks above, that's very positive. If there's an immediate slide in the next 3 to 5 sessions, and suddenly, let's say it doesn't even go to a D in the daily and breaks down from here, it would actually have to break down to 169. It's like 9 or 10 points below. I just don't see what's going to do that right now. So these are good charts. These are acting well. At this point, would I buy them only for a quick trade because they're getting quite close to some kind of a pullback? What I am saying is that the weekly charts make a difference. How you close it and how quickly in the V-shaped formation, this is more what you want to see. And you're getting that in the the XLK, which is the, you've just gone above the previous left side high. So XLK is acting pretty well, very well actually. The QQQs are acting very well. They are the best ones so far, and a couple of these other sectors that within the context of selectivity. So let me just make it real clear. The VIX keeps rallying, and yet the market is still holding very well. VIX is at 18.44. Someone's very nervous. If the VIX holds in the 18s, that's going to be positive for the VIX, negative for the market. By the end of the day, towards the end of the day, when all the buying and selling is completed, VIX falls below 18. It says market should go a little higher. I'm a little worried. We'll talk more about the monthly charts tomorrow when we've closed out the day. Basil Chapman, we're still long the Dow.
No matter
I'll be
what
back
kind of
tomorrow.
trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.